Good morning. Welcome to the stock group. Today is January 15th. So here we go. Let's see what the market has done recently. Happy New Year to everybody that hadn't spoken to already. So here we go. So we start with the Dow. Let's see what the Dow has done this past week. Looks like here's the last 5 days. It's down Monday, up Tuesday, gapped up Wednesday, but ended up down Wednesday, Thursday, Friday. So Dow was down for the week. NASDAQ, kind of same thing overall. Was up Monday and Tuesday, down Wednesday and Thursday. Tried to go up a little bit Friday. The Russell, which is the small cap stocks, Monday down, Tuesday up, Wednesday and Thursday down, and tried to recover some on Friday. Then the S&P 500. See here, started the week up a couple days, down Wednesday and Thursday. So pretty much ended the week barely positive for the S&P. So let's look at some of the individual names. So Apple, tech stock heavily weighted in the S&P 500, up for the week, but still coming off of the lows. Actually, from last Friday to Monday. Monday was a up day. Tuesday was up. Wednesday and Thursday was down. So Apple, let's look at Facebook. Now referred to as Meta. Facebook's up for the week, down Wednesday and Thursday though. But overall for the week, they're up. Let's look at Netflix. Wow, Netflix got, I don't know what happened with Netflix, but they were down all week. Had a couple up days in the week, but down overall for the week. Down pretty good, actually. So I'm not sure what happened with Netflix. Google. Google was up for the week. Had a big update Monday. Monday, Tuesday, Wednesday was actually pretty good for Google. Pulled back on Thursday. Gap down on Monday, but tried to close positive still. So now let's look at a couple of the ones that we have. Let's see who all's on today. We'll go through some of the ones that you all have. Get to the participants list. All right. Dre, let's talk about this Fubo. Man, been getting killed in this one. Fubo actually down for the week a little bit. Started at 1369 and pulled back on Friday. So let me go back. I want to show something here. So I've been talking about this Russell since the actually, we go back here. You see this Russell. We were at a high back in is that November? I believe that's November. Oh. Okay. March. Hold on one second. This chart is wrong. Yeah, so the Russell's just been in a free fall. And so you can see here that, since basically the beginning of the year, Russell's just been down, just going down. And for this, because of the NASDAQ related, I'm sorry, the Russell with the small caps, like I was just showing you on that Fubo, it's been down. So if some of these smaller companies have been getting really killed. So let's look at Robinhood. Robinhood is another example of a company that's just getting killed. So you can see here at a high back in November, but it's just been pretty much straight down. And since December 21st, still been going down, but not as aggressive. But you can see here since the beginning of the year, had the first 4 days down and then pretty much sideways since then. But Robinhood has lost a lot of value. You can see here, Robinhood came public at what, 37, and now it's 15. So some of these small caps are really getting killed. Let's see. Let me go back through the list here. So Dre, yes, we heard in that Fubo, just gonna keep fighting back, selling calls. We'll sell some calls this week on Fubo, Dre. Try to make a little premium back. But it's just an ugly chart, man. But I thought we was gonna get a bounce because we got a good day on Wednesday, but they gave it all back. So couldn't hold Wednesday's nice little game. But we'll hold on there. I know Christian was into Robinhood. Robinhood's just getting killed. Let's see what Angie. I see Angie's on. Hey Angie. She likes the see Delta Airlines. Actually, Delta's been actually going up, so pretty much sideways for the last 9 trading days or so, but coming off the lows of December 21st, and then just been going sideways again. So, but Delta's doing better than most. Let's look at Spirit. Look at a couple of the airlines here. Spirit kind of sideways. American sideways. Still coming off these lows of December 20th. So it looks like all these airlines are kind of trading sideways right now. Let's look at Southwest. Actually, Southwest is up for the week. It's doing better than the overall airline trend. All right. Let's see. Who else? Brenda. Let's look at ATVI. Activision. It's a gaming company. For the week, up a little bit. It had a huge day Wednesday, and down Thursday, Tuesday. Wednesday and Thursday. Huge day Tuesday, Wednesday and Thursday down, but then had a good recovery on Friday. So, but they hit a high on January 4th. So it's good. Let's see in terms of support and resistance on there. Yeah, it looked like coming up to some support at 67. So be interested to see what happens beyond that. Let's see who else is on. Oh, deep. Let's look at your wing. See how the wing's doing. Wingstop. Okay. Yeah. We was talking about this last week. This Wingstop at this 157 broke down through it on Thursday. Then had a huge down day on Friday, but bounced off the lows and only was down a few points. Well, not even a few points, like 14 cents. So I know hopefully Wingstop will get some traction here. This is a good sign with this huge bottom candle if it can hold there. So it's on that Wingstop, but definitely in a downtrend since basically New Year's Eve on Wingstop. All right, let's see what else we got. Brand, Angie, Dre. Okay. I think I covered everybody. All right. So have any of y'all been buying anything in this pullback in the overall market since particularly in the Russell small cap stocks? Anybody buying anything?
I bought a little Home Depot the other day. That's my baby, Home Depot. Just trying to hanging out with it.
Yeah, Home Depot. Oh yeah, I didn't realize Home Depot had a big down day, gap down. Yeah. Okay, but it's you're still right here in this range though. So if like say right here, draw this trend line. So if Home Depot can hold this 365, you should be good right there, but definitely down out of this general area that we were kind of in this box here. So yeah, it's giving up a little bit, but don't fret. If you break below this 365, then you're gonna have to. Now I don't know if this is a trade or a long-term hold for you.
I was holding it.
Just holding it. Okay.
Mm-hmm.
Yeah, just keep buying. And I would say, are you dollar cost averaging in it or no?
You're right, averaging it up.
Okay. Good stuff. All right. Let's see. What else? Let's look at Lowe's. Yeah. See that kind of the same thing. That sideways action in that box, but Lowe's didn't break down so much. Lowe's is still looking good, and if it definitely can hold this area right here, it's 239. Should be fine. All right, let's see.
I got a little Carnival maybe a couple weeks ago, and I'm debating on buying a little bit more.
Yeah, Carnival. It's interesting because as I see this, kind of tracking with the airlines. So you can see when we looked at those airlines earlier, they're trending up and to the right, particularly off these December 21st lows. But Carnival was doing a little bit better because most of the airlines were sideways for the week, other than I think it was Southwest. But yeah, but Carnival's still holding. As long as you above this 22, and let me draw this trend line here. So if it can maintain that trend, it looks good. I'm not sure. It's funny because with all of the Corona news here lately, you would think that these travel stocks and leisure stocks would be doing worse than they are, but it doesn't look like that's the case. So let's see. Let's look at what's the other Norwegian cruise line? Is it? Trying to think what the name. Oh, here we go. Yep, pretty much the same here. Kind of tracking like Carnival. December 20th, December 17th. Seemed like all of these had a low around that time and just continue to go up. And this has a little bit longer uptrend off of the lows of December 2nd for this stock. So yeah, it looks good on the leisure side. So yeah, it looks good on Norwegian. Let's see who joined. What's up, David? What's up, Barry? Let's look at David.
What's up, man? I'm in the airport, so it's gonna be muted all the time.
That's all right. It's cool. Be safe traveling, bro. Let's see. David, what you was looking? I know David has some Roblox. Let's look at Roblox. Anybody got any kids? They probably know what Roblox is. It's a gaming company. Actually, Roblox has been in a downtrend since.
Yeah, I would have been so.
Right. It's a Roblox.
Around 144, 140. Oh, it's been a minute.
You crazy boy. All right, let's see. Yeah, Roblox is. Yeah. From its 138 down to yeah, they've been would it come back up to support here at 76. Yeah, Roblox has just been killed. And one of the things too, a lot of the higher PE related stocks seems to be a rotation into value and away from some of the higher PE, and then particularly smaller cap companies as well. So like you compare that to like the banks. You can see here banks. So this is Bank of America hit a low on December 20th, but it's been up since then. Had a gap down day on Friday, but Bank of America has been in a good uptrend. Let's look at Wells Fargo as well. Wells Fargo is killing it. 47 up to 58. Let's see, Morgan Stanley. Morgan Stanley getting all right, they're bucking the trend. Morgan Stanley is actually down big time. Gap down between Thursday and Friday. I don't know what that's about. Still got support here at 96. Let's see. Let's look
at JP Morgan, Mike. See what it's looking like.
Okay, we'll do here. Citigroup. Citigroup was off of these lows up and to the right. JP Morgan. They were doing good, but I don't know what the news was on Friday. There's a big pullback. You talking what, close at 60, 168, and then opened at 160, and then lost another 3 points. So that's a $10 drop.
You know, it got slammed.
Yeah, it did. I don't know. Oh, you know what? Earnings. I didn't see that below. Let's look at what they did on earnings here. Yeah, so it's an earnings play. So the earnings estimate came in less. They were expecting 29.78 billion, and they came in a little light at 29.25. So $525 million less in terms of what they estimated. So that's why the stock got hit. So what happens is analysts on Wall Street, they would have projections around what companies, what they think their numbers should be based upon, a bunch of different factors. And a lot of times the company will give guidance, forward guidance. And so they kind of set a sales or revenue expectation, either revenue and or earnings. And if they typically miss one or two of those numbers, a lot of times the stock will get hit. And this looks what happened here. And you can see it's confirmed by big volume on that day as well. So, but yeah, let's see. So there's definitely been rotation. So you can see here from December 20th, on up, it's been a rotation into these interest rate sensitive stocks, banks. Let's look at Prudential. Let's look at another financial. Same thing. Prudential's been rocking. Even my own company has been stuck in a doldrum for years with a financial company, and actually they've been doing good too. Off of lows 449 December 20th, now to 585. Yeah.
Take a look at GS for me, Mike.
HGS or AGS?
No, GS, Goldman Sachs.
Oh, Goldman Sachs. Thank you. Yeah. Yeah, Goldman is, I don't know what's up with Goldman. Goldman is doing the opposite. So they hit their high on January 5th. But they've been going down. I'm not sure. I don't know if this is in anticipation of earnings that come out this week or next week. I'm sorry. So I don't know, but Goldman is not acting well considering what all the other banks have done thus far. So that's crazy. Let's see. Are you all looking for any plays that have been beat up recently? Are you adding to your portfolios? Any names? I know Dick said you bought some now. Home Depot. If you haven't, I can give you a few to consider, particularly at some support levels. So this is AMT. AMT is a cell phone tower company. So there are two like big ones. It's AMT, which is a American Tower. Then I think it's let's see what the other one's called. I think it's CL. Is it Clear? Nah. I gotta remember the other. Forgot it in my watch list. I can't remember the name of the company. I know the ticker is SBAC. That's it. SBA Communications. This is the other cell tower company. And yeah, you can see here, January they've gotten hit. So coming up to support here as well. That's one. Actually, I should have bought some of this. I've been looking at this, but Shopify got down to the support area really close. I was trying to wait to get to 1040 and didn't quite get that close. Got down to 1060 something. But Shopify is one's an e-commerce based store. So a lot of people that have online businesses, they use Shopify for their e-commerce needs, websites and processing, selling goods and services. Let's see. Hey, come on. Let's see. Come on. I think y'all were looking at
Hey, Mike. Good morning.
How are you?
Good, Mike. How are you?
Good. Let me see. I think you're at that Checkpoint. Come on, let's look at that Checkpoint software. Yeah, let's see. Oh, actually, Checkpoint's been doing good. Oh, real good, actually. So really, if you look at this trend, so almost two trends with this. So you got this kind of this first trend that's kind of intact, but then since January 6th is even took off even higher. Okay. Let's do support and resistance on this. All right. So I guess I'll draw this one too. So just some support and resistance here. So you can see coming up to this 127, actually hit the 127 on Friday, but pull back a little bit. But see if you can continue this uptrend in Checkpoint. Yep. Let's see what What else?
Are you able to hear me?
Yes, ma'am. I can hear you now.
I've been trying to talk for 30 minutes.
Wow. I'm sorry about that, Angie. How
It's
you
not
doing?
your fault.
Yes,
I'm
ma'am.
good. I know I've been off for a while, but I just wanted to answer a question that you had said. I have not been dollar cost averaging down or anything. All I've been doing is adding to my balance, my dry powder, and that's it because of the trend. Because
Okay.
I've been seeing it go down.
Okay.
Okay, I'm gonna go back on mute because I'm working.
Yes, ma'am.
Okay.
Yes, ma'am. Thank you.
All right.
Hey, Angie, one
All right.
quick second. Are you still in the airlines?
I am. I heard you talk about Delta,
Okay.
and yeah. So I have American Airlines and I have Delta. I have Carnival Cruise.
Okay.
I have Norwegian. You know, I'm a travel agent anyway. So,
Yes, ma'am. Mhm.
and I know people are still traveling, even though all these crazy things are going on, canceling flights and things like that. When people book trips, they are very reluctant to cancel. So a lot of times they'll wait for the vendor to cancel because they get a credit. So,
Okay.
yeah. But
Okay.
I because of how bad things have been looking, especially at the beginning of the year, I've been just adding to my dry powder. That's it.
Okay. Okay.
Okay. All right.
Good stuff. Thank you.
Uh-huh.
Yeah, and that's adding to your cash in these pullbacks is definitely a good thing. However, though, one of the things you can do is start trying to put some of it to use, because if once this, particularly in this Russell pullback, so small cap. So let me give you some examples. So like, let's look at this one here. So this is a mutual fund. And actually, let me find innovation. Hold on. Yeah. So this is the mutual fund by a lady named Kathy Woods. She's big into innovation and technology stocks that are disruptive. So you can see here, this ETF is down, from 120 to 80. So whatever that is, 20%, 30% or whatever. And so, but you can see it's starting to bottom out here. And if you look at support, they've broken down through all these previous support areas, and actually where it is here, you got this point here on the chart. So, and the reason why I bring that up is as you're adding to your cash pile, at some point this trend is going to reverse, and either you're going to wait for the confirmation. So I'll take that point and I'll take this one here. Either you wait for the confirmation to go up, or you buy at some of the points, down at support on some of these, particularly when you've had a extreme pullback. Like here, if you go back, this goes back to February, right? So February at 157. So you're talking, down to 77 as of, so that's almost a 50% pullback. And actually in this one, we had talked about this Boeing. You can see Boeing got down to, and this is, in with the, you can also call this kind of like the airline play. So it's actually right in line when we looked at some of those other airline stocks where they hit a low back on December 20th. And they've just been going up since. But Boeing had been in this downtrend. You can see this downtrend here, this long red line, and it's actually broken this downtrend and got the confirmation here at 216, but it was down as low as 185, 187. And so that's good. Let's look at some commodity stocks. So
Before you flip, Mike, back
ma'am.
to the ARC, with it being so tech heavy, and aren't techs interest rate sensitive, and with the threats of the interest rate hikes, would you still think that it was ready for a turnaround?
Great question. I really want them to go ahead and make their first raise, the Fed, because I think what that's going to do is going to get it out of the way. And I think they are talking possibly about 3 interest rate hikes this year. And yeah, typically you have this correlation between interest rates and stocks, and typically when interest rates are rising, stocks usually go lower because as interest rates rise, it allows bondholders to do better, and so that's a safer money bet than equities. But I've heard some people talk about that the interest rates thing may be overblown because they're saying that some of the inflation where we had back toward the end of the year, they don't know if it's going to continue to be sustained. Then with all the stuff that's going on with the variant, how that's affecting businesses as well. So it's still a little bit of the jury is out if that's gonna be the thing or not. I think the bigger thing is so there's this. I heard this report one time. They said that the Fed were some of the bigger buyers in the market, and so as they stop adding liquidity and stop QE, that's going to have an effect. And I think that's probably what we've seen in terms of this rotation. But it could be. I just don't know yet. But I want to see what happens once we get that first interest rate hike, and if things kind of settle down from there. But you just so when I was going to say with the let's look at Deere. John Deere. What is John? I thought it was Deere. Yeah, DE. So what I would do is pay attention to some of these industrial stocks, like the Boeings, John Deere, some of the kind of in trying to think of some of the other. Another good one is not even industrial, but it kind of helps with the economy in a way. Look at McDonald's. Another one is like Dollar Tree. So think about it. Once the economy gets bad, people start to move toward more either raw materials, commodity related stocks. So let's look at this copper stock. So yeah, so copper, things of that nature. Let me see, it's Joy Global. I think Joy Global, they must got bought by I think they got bought by Deere. But like the equipment, I'm trying to think of big of equipment other than John Deere or some other equipment.
Caterpillar, is that one?
Yeah, Cat. Thank you. That's what I was trying to went blank there. Yep, Caterpillar. So you see how this rotation is. So when you start getting into interest rates hikes, they start moving more toward hard asset companies that, one valuation. So like let's look at this for example. So if you go to the financials here for so you can see here, see this PE ratio, got a PE ratio of 24. So this is a pretty low PE ratio. Like another would be, let's look at Apple's PE ratio. Right. So Apple's PE ratio is 30. So 24, 30, those are some normal PE ratios. Whereas if you look at some of these higher flying stocks, so let's look at give you one that's been getting killed lately. Chewy. So look at Chewy's PE ratio. So Chewy's PE ratio is 2,000, right? Where we were looking at other PE ratios in the 20 and 30 area, and you see that compared with so just look at the chart. So you can see these stocks that had these high valuations, they're just been getting killed, where you had these other stocks that are more value based and reasonable. Basically, which companies are making more money from our earnings perspective and relative to the price, versus these high flyers that got these high valuations and they're much more expensive. they're the ones that a lot of money has come out of since the just going back to November. And then this is actually a large cap stock, but it's getting treated like one of these technicals. And I guess, it is a technical based stock, high tech stock, because, it's e-commerce, but it's for, pet food, but they've just been getting killed. So when you compare that to kind of like the Caterpillars, the Deeres, the McDonald's, so even we go to McDonald's, they're down. But if you look at the trend here, so you can see here, going back to October, McDonald's has been in a good uptrend. Just this week, did it actually start pulling back, or late last week? So yeah, that interest rate thing is a big deal. I just don't know. I just want to see what happens when we get that first raise, and if they're going to go through with all the 3 hikes for the year, because they're trying to slow the economy down because of the interest rates. Because of the inflation. So you can just look at gas prices, cost of food, housing, those things are, and even car prices for that matter. All of those are up pretty big here lately. So pay attention to those. I've been trying to fight the trend against and just been buying lower on a bunch of stuff. But if it doesn't turn around, that's going to be a bad bet on my part. But you got some stocks here that are some good companies that have just been getting killed, like PLTR. This was typically is traded in this, so we go back here to November, this thing was just in a range here, anywhere from 29 to 21. Now you're talking 16. So, and then again, this pullback, but this is a good company. This is a cell phone tower company I was telling you about. So it's a good one. So just, now let's look at this. Now this is T-Mobile. I'm sorry, not T-Mobile, but AT&T. So AT&T has done well. I thought they were going to cut the dividend. Let's see if they did or not. Here's a dividend here. Let's look at the last one. So it's 52 cents. Nope, there was talk that AT&T was going to cut the dividend back, but they didn't, and stock got hit, went down to 21, but it bounced back up. So you're looking at really like a 20% move off the lows of December 20th. Yeah, 24%. That's crazy move. So yeah, let's look at UPS and FedEx. So UPS actually did pretty good off of these lows December. We're kind of down since the beginning of the year. Let's look at FedEx. FedEx kind of trending the same, but they've done well. So definitely a rotation out of those high tech stocks, higher evaluation stocks, and more stocks with lower evaluations, lower PEs. So if I go to that FedEx, let's see what FedEx PE is. Yeah, their PE is only 14. So it's, so from a value perspective, this is cheap relative. So what price to earnings ratio is? It's a statistic or I guess it's a ratio. It's technically what it's called. So it's a ratio that shows for every dollar price of dollar, how much earnings do you make? So for every, I think it's $1 for the price, you get $14 for the earnings. And so I may have explained that wrong, but all I know is the lower the number, the better, the more value that you have. The higher the number, the more expensive it is, right? So there's just definitely been a rotation into lower PE stocks, meaning that more value as opposed to some of these higher flyers.
What are your thoughts on DraftKings? He's been crushed.
Oh,
And
yeah.
like when you talk about getting in on somebody low, but I've been hesitant to get in since he's just dying.
Yeah. Let's see. What is it? DRKF. What's that ticker? Let's type it. There we go. DKNG. Right. Let's see. Yeah. DraftKings. Yeah. So this is an example. So if you see here, let me extend this downtrend. So really, the DraftKings has just been getting killed. So let's see if I can find it here. Just trying to see if I can find the PE here without going to the other screen. Yeah, it looks like they're negative on earnings, so they might not even have a PE. So stocks that don't have a PE, meaning that they're not profitable. So let's see if this is the case with DraftKings. So that even means that they don't even have a PE ratio, means that they haven't made money, so they're losing money every. So you can see here they were positive back in 2019, but the last 2 years they're losing more money than they're making, so they don't even have a positive ratio. So they're not a profitable company, and so that's one of the reasons why this thing is getting hit. So
hey, Mike.
Yes,
Good
sir.
day. How you doing? How about Art? How about Kathy Woods? What do you think? What's going on with that?
well, they killing most of her companies as well. Fit that kind of deal where some of they're early innovators in a bunch of arenas. And I think it's two things going on with this. Kathy Woods, she was like the darling of the stock market last year, and I think a lot of people took exception to her, and I think they've tried to do everything they could to crush her, and so most of her stuff is down huge for the year, right? But what, and actually she comes out with let me see if I can find it for you all. If you're interested in economics and like listening to that stuff, she does let's see, she does a really good maybe spelling that word. I think it's either C or
I think she does a good job at telling people what's going on and keeping everybody informed.
Yeah,
and transparent.
absolutely. And so she does a report. It might probably easier to find it on YouTube, but she does a thing. I think like, I don't know if it's once a month.
Yeah, I think it's bi-weekly or whatever.
Okay.
But she really believes in, like, this is nothing. This is
Right now, and the thing is, so one of the, so I would definitely tell anybody. So go out here to ARK Invest, and so she does these video interviews, and she goes through. So backing up, so she's a fund manager for ARK Invest. ARK Invest they have a bunch of different ETFs that they invest in, and with that, she's mainly focused on innovation. And so her thesis is that a lot of these companies in this innovation space, they're changing the way that business is done in a lot of the areas that they're invested in. So her whole idea is she has a 5-year investment thesis, meaning that anything that they buy, they're looking for 5 years down the road to try to earn at least 15% a year. So if you take 15% compounded over 5 years, that'll be 100% return. So that's her game. So number one, she has a long-term perspective, talking 5 years or more. 2, on innovation, meaning that companies that are doing things that are finding inefficiencies in certain business areas and trying to use technology to be able to address them in order to return profits. Now, on some of those things, they're early, and because of that, they may have high valuations. And so when we had this rotation out of so if I go back here to so we can just look at the indexes. So if you take Russell, so Russell is again the more of the stocks that she would be looking at in terms of the evaluation here. So their stuff is just really going down, right? And so you see here, but in terms of the Dow, this is the rotation kind of from. So if you go back to November, this is kind of the high for the Nasdaq, for the Russells in this particular area, and then we had this huge pullback to December, and then you had a bounce. And so when you compare the Dow to the let me look here. So here's the E-mini on the Russells, right? So you see we hit a high back here in November, but when you look at the Dow, so that was at high in November. Dow got crushed down to December, but on the Russell, if you look at December 1st, so you look at December 1st here, and we've just trended sideways, since December. But in terms of the rotation back into the value stocks, December 2nd was like their low, and they're up big. So it's just the rotation out. Now, here's the thing. If you just say you believe in what she's saying, that, hey, this is temporary, this stuff is not going to last that long. As of right now, she's wrong. And anybody has been holding these things, just by virtue of what they've done. So we just look at her ARKK. So you can see here, she's wrong as of now, right? But if it doesn't last and we get a turnaround, some of these things are going to be valuable. So let's just say if you get back to a rotation and they start to buy back these smaller cap, these tech names, then these innovation stocks are going to turn, and she may end up being right, but right now the market is voting against her. But again, she's taking a 5-year horizon. So and if you're long term like she is, you're just buying lower. You're buying things that you like at better prices, and you're just dollar cost averaging in. If you're trading and you don't have the stomach for these losses, then you probably want to sell and wait till this carnage is over, and then pick up back up on the reversal. So that's it's hard. I mean, you look at this she's actually buying Robinhood right now. And so one of the things I would say with them as well, if you go out to, I think it's ARK Invest.
You're buying Robinhood and DraftKings, what we always just talking about.
Yeah.
So she's buying some innovative stuff, but it's just, who knows?
Right. Let me see if I got it.
And an expense ratio is 7.75 too. So that's kind of high. Be losing like that.
Yeah, but once this thing turns around, I'm trying to see if I may have deleted her. So she comes out with these reports. So if you sign up on her site, you can see that they'll send out these reports and they show you what they're buying. So this is as of January 4th. So Square, DraftKings, Roblox, Intelliga, Stratasys is a 3D company, U2, Invitae, and Berkeley. So that's in one fund. Another fund, Planetar, we talked about that one, a bunch of other names here. So these are all innovation type stocks, but let's pick one that I don't really even know much about. Let's NTVA. Let's go back to that one. You can sign up on her site, subscribe to that, and you'll get that report to let you know what she's buying. And they control millions of dollars or maybe even billions of dollars of assets. And so let's look at NVTA. So you can see here, right? It's just been getting killed. But so let's chart this up real quick. Take this right here and here. All right, so, and actually I can take this one too. All right, so if you look at this chart here, definitely downtrend. It's broken through all levels of support to the upside. And you're back down here at some, you got to get down here to the $6 range. And so this stock is definitely been killed. But, she believes in the innovation of this company, and, she's adding to it as it's lower. And again, if let's look at the PE on this. Check. All right. So don't even have a PE. So meaning that they're still losing money. They're not profitable. Right. And so these stocks are just getting killed right now. Now, but if they get to a point where they turn a profit and they start to become profitable, it could be a good thing. But right now it's just out of favor. And, so back to Brenda's question in terms of we don't know how this whole interest rate thing is going to play out, if they're going to have 3 raises or not. If you listen to Cathie Wood's commentary, she seems to think that it's overblown, that the real interest rates are not going to, the real inflation is not as high and it won't be sustained. Therefore, the Fed is not going to raise as much. I don't know. So, you gotta figure out what your conviction is in terms of, do you believe in what you have? And a lot of it has to do with your horizon and your personality too, right? So you heard me and Andre, we were talking about this stock here, right? We've been in this stock since 34, right? So it's 34, now it's 13. So if you don't have a long-term horizon, just using this as an example, if you don't have a long-term horizon and you're down literally, what is this? 60% on this, you couldn't stomach that loss, right? And particularly if you're trading, right? That would be a disaster. But if you long-term holding and you're buying on the way down, and that some of this is this pullback, some of it was related to the company, but then a portion of this move to the downside was a rotation out of these stocks as well, and more rotation into value. So you just gotta hold it out and wait, or figure out a strategy on how you're gonna do that. And so if you have a long-term perspective and you just buy over time, then you just pick up shares as they become cheaper. But if you're trading it and this was just a trade, then you should be shorting this thing right now as opposed to going long on it. So any other questions or any other names we want to look at? All right, I take silence as a no. Let me see if there's one other here I want to talk about.
Sorry, Mike. Is it a good time to put the money on Fubo, or
You say on Google?
Fubo. Just now you showed that.
Oh, Fubo. Yeah, I would definitely say it. Yeah, Fubo so what Fubo is it's a streaming company. So they stream sports. That's their main thing. And they're also getting into I think they got another business line that they're starting as well. But yeah, so Fubo TV. So if you do, live sports TV without cable, so you could think of them in the same space as like a YouTube TV, but they have a sports focus. And so this, all the different channels that they carry, and so this is so in this case, you can think of this as like an innovation type stock where they're competing against cable companies and satellite companies, right? For TV. You know, and so if you think that that is a business, if more people, if you feel that, hey, that this is innovating on the TV space and eating into the gains of, you know, the Comcast, the AT&Ts, the DirecTV, you know, that's who they're taking market share from. So I you know, if you ever were interested in this company, definitely this is a good time to start picking up some. Now, even it's at 13, can it go to 8? I hope it don't go to 8, but it may. And so this would be one where you can, you know, start a position in and just start averaging into it. But again, beware, you know, it can go lower. But if you believe in the thesis of the company, you know, study a little bit on what they're doing, what some of their new projects are, it may be worth it. And why I give the caveat is, you know, just because I have my personal opinions about it, I want everybody to kind of do their own due diligence, because what happens is when you buy something and if it goes, so let's say if I told Kamal, yeah, go ahead and buy this, Kamal, this is a good stock to buy. It's cheap now and buy it. But if it goes down to 8 and his perspective was the money that he put in, he didn't really want to lose it, but it's down there, then he could have just taken my advice without doing his own research and trying to figure out, does he have the stomach for it? It may not be, you know, consistent with his investment thing. So one thing I'll tell you about is since we have this pullback since, you know, November and in the markets in general, you have to really determine what your kind of personality is. Can you stomach during the hard times? Or when you just see stuff start going down, do you just not even, you know, look at your portfolio because you're losing so much money? Do you get to a point where you're kind of petrified and you're unable to make a decision and you're just holding stuff that you know you should be selling, or you see stuff that are on sale and you're unable to buy? So you just got to kind of know what your personality is, because it comes out, you know, with this stuff, and what your decision making is. So I tell everybody, kind of do your own due diligence. When you make a decision, you buy or sell, make sure, no matter what you've heard somebody say about it, make sure that you have some conviction with it and the reasons on why you're selling. If it's a long term, are you going to average in? Or if it's just a trade, at what point you're going to get out, either with profit or at a loss. You just got to kind of make those decisions and own them yourself, because you can listen to me, you can listen to, you know, talking heads on TV, you know, guy you meet, you know, in an Uber ride to give you a hot stock tip, right? It doesn't matter. You have to own these decisions yourself. So, and be comfortable with them. So.
Got it, Mike.
Yes, sir. Yes, sir. And that wasn't just specifically you, Kamal. That was kind of for everybody. You know, because I just want you all to, because when things turn around and you're down 60% on the stock, and it can happen, you know, sometimes you might say, well, man, that was crazy. You shouldn't have held that. And, you know, and for some people, that's the absolute right thing. They couldn't stomach a 63% loss. Whereas other people say, okay, hey, I'm just buying it up because I believe, like Barry just asked a question, you know, is Cathie Woods right? I hope she is in this case, because, you know, this is going to be a better value, you know, when things turn around. If she's wrong, then we might be going to 8. So, you know, so that's, but I own it though. And I'm okay with, you know, what happens at it. And then another thing too, is that, you know, we're not just taking this straight all the way down. We're selling. So we're using options to kind of help fight and against it and get some of our cost basis back. So that's another thing that we're doing there. And so, so it's not just holding it without any plan. So, any other questions? Okay. Well, I thank everybody. Put your watch list together. You know, put your support and resistance on your charts, and then just one thing I would say, we're early in the month of January. Look at your portfolio, look at the value and write it down somewhere and keep it so you can kind of see how you're going to do for the year from a dollar perspective. You can look at how much cash that you add to it over the year, and you can subtract that out at the end of the year, because you want to see what your performance is, kind of year over year, to determine if you're doing better or worse, at the end of the year as opposed to the beginning. So just get an idea. And I'll say this and we'll drop off. Just think about, what are you trying to accomplish this year? Do you just what are some of your trading or investing goals for the year? I mean, I know everybody wants to make money, but what are some of the specific things that you're trying to accomplish? So just think about that, and we'll talk about that next time. So again, if there are no other parting questions, we'll wrap it up here.
Have a good week.
All right. I appreciate it. Y'all take care.
Hey, thanks, Mike.
All right.
Thanks, Mike.
Okay.
Bye.
Bye-bye.
Right.
Oh, I'm sorry, Milt. I didn't hear you get on.
All right, thanks, Mike.
All right.
Oh,
Sorry about that, Milt. Sorry, I just heard your voice there. Yeah.
okay.
Yeah. Listen, we'll stay on. I'll look at this POTR. What are you doing with it, Milt?
Oh, actually, let me just say, this has been a pretty good year so far.
If you holding the right stuff.
That's right. And remember what I said, bank?
Yes, sir.
That Wells Fargo was beautiful.
Oh, I thought you hated them. You bought some of that crap.
Remember, I said they're crooks, but I was buying them when they were under 50.
Yes, sir. Okay.
Yeah, of course they're crooks.
Right.
I stand by that one. But
okay. Yeah.
The reason I bought them above all the other ones is because their management has. Well, I don't know if they're crooks, but they're not as crooked anymore.
Oh, okay. As the old guys, huh?
Yes. So that's what I knew financials were going up because of the Feds and the rates. And so I looked at the financials, and this is the safest bet for me.
Okay.
Because this is one of those story stocks where management is not as crooked, so they won't be hit with all these fines anymore.
Okay.
And plus, they're probably underowned because companies, mutual funds do not like to own crooks. So that was my thesis for that. I sold it on Monday, and that was because of all this bad news that I knew was coming out this week. And plus, I don't like to hold anything in earnings right now. I am just getting in, get my profit, and get out.
Okay. Got it. Yeah, I wish I would have got in on this. I didn't buy any of these financials to my detriment. Because I know we talked about it a few weeks ago, and I didn't get any. Should have. But yeah, but I've been watching them though. I'm seeing all of them going up because even my company is a financial company.
Oh yeah, I should have texted you because I wanted to find out. You told me this has the same story, bad management. Now it's okay, and I forgot what it was. Oh
yeah, AEG.
Now I'm kicking myself because I forgot. I should have texted you on that one.
No worries. How you feeling? I know you said you had a little bout there with a cold. Much better?
Oh yeah. Saturday was no fun.
Oh wow.
Yeah, but I'm okay now.
Okay, good stuff. Yes, sir.
Oh, yeah. One last thing, energy.
Okay.
I don't know if you remember I told you about S&M.
Yes, sir.
SM.
Yes, sir.
Okay. So right now I'm holding this. I'm a little nervous. I have made some really good money, and like I said, I'm all about taking my profits and leaving. But energy is still so powerful. I don't know if I can sell it right now. I want to.
Okay.
And so I'm going to do what you said, do a trailing stop on there, maybe 10% or so. Give a lot of room to wiggle. And if it hits, it still give me a lot of profits though.
Yeah. That was definitely a good play. And it's funny because kind of when those financials took off, energy went right along with it, because I'm looking at this compared to that Wells Fargo. I want to say December 20th was probably the low. Yep, was a low in it as well. Wow, that was a good move. That was a good move. Yeah. What are you doing about your PLTR?
Oh, that I use that as a source of funds. So I sold the physical and I bought long-term options. So I have January 23rd, 1250s.
Okay. 1250s.
Yes.
Okay. All right.
So I can do some easy cover calls against it. So like you said, reduce the funds. So I took a killing in this one.
Yeah. Everybody have.
But I sold, I think it's about around 20. I sold it and then I went into long-term options and I've been buying. So, as it goes down, I'm thinking that it may see maybe 12 even. So I'm doing, like you said, dollar cost averaging. About maybe once a week, I'm going to buy another long-term options on there. I think, I'm trying to remember, I think I spent $600 on my last one.
Okay.
And Fubu, on your guy, I'm going to probably do the same thing on it. I'm going to probably start buying some 10s on it. I haven't looked at the option chain on it yet.
Okay.
But I see it probably head down to 10. So, I'm not buying it yet. This market makes me nervous to buy a stock like that right now. But I am definitely going to start hitting that. At 10, I am going to start buying in and just keep dollar cost averaging, come what may. Because I like its story too.
Yes, sir. Yeah, it's, look at he's talking about the options chain on PLTR. Let's see. Okay, you can get the long term. You say 23s?
Yeah, January 2023.
Okay.
1250.
Oh, yeah. Hold on. Sorry about that. Okay. 1250s. Yeah, 555 right now.
Okay.
Yep.
Yeah, I may buy another one next week.
Okay.
Yeah, I expect that one to go down too, by the way. I don't see the sunshine right now.
No. Now let me ask you on that milk. Would you be a secure put buyer on those?
I see them going down, and they're going down rather quickly. I'm not sure I want to own the physical too. I don't think I want to I don't want to tie my money up right now. There's too many good options going on. Like the banks, they're coming into earnings, so I expect them to cool off. So that's gonna give me another entry point to get in there again.
Okay. And you're playing, are you playing the banks with options or are you playing the banks with physical?
I am buying no physical. I have more money now than I had ever had as far as not investing.
Okay.
So it's all options. It's either going to be long term or short. Remember, my short term options is 3 weeks. I don't play that weekly stuff. That I'm not young enough to play that type of stuff.
Okay. Gotcha.
So I'm going to do 3 weeks or do a 3 month. And when I do the months, that's usually because I'm trying to capture some earnings. It's something I know that may have good earnings and I want to capture it. Then I'll do something like a 3 month. So I won't get that vol crush in there. Well, alleviate some of the vol crush, I should say.
Okay.
And plus, if I'm wrong, maybe give me time to recover.
Well, and so you're just buying. Okay. So you're saying, all right, I follow you. So on that, like if I go back to that PLTR, let me see. I know you have that long-term leap on it. Are you even playing any of the shorter terms on that one or no?
I am not right now, but I probably will.
Okay. So, but you're playing the shorter terms on the banks.
Oh yes,
Okay.
I already have.
Okay. Got it.
Basically I sold on Monday. I sold Morgan Stanley and I sold Wells Fargo, and I'm looking to get back into them after the earnings. I'm going to see what the street think of their earnings.
Okay. All right. So here's options chain on those. Let's look at these Februarys. Okay. All right.
Yeah, I'm definitely going to be rolling back in them, but like I said, I'm going to wait till after all their earnings. Well, after the big four earnings. I know they already started on Monday. I forgot who did. Somebody reported earning and they got slapped. And I'm trying to remember who that was.
Goldman Sachs. I think it was Goldman. I think it was Goldman. Was it Goldman?
Okay.
Yeah, Goldman.
Oh, yes. You see what I'm saying?
Right. Yeah.
That's why I sold.
Okay.
I knew, one, they were going up fast. Yeah, like that. When you see something like that, you don't hold that into earnings. No, that's just asking for it.
Yeah.
I'm not sure when their earnings are, though.
It looks like it was whenever the 14th. I guess it was yesterday. Yeah.
Oh, they did that after earnings? Oh, I'm definitely getting back into them, but I need a pullback before I can get back in.
Yes, sir. All right. Good stuff.
Yeah, that tells me they really like their earnings. So after they sell off that, I am 1% getting back into there.
Yeah.
I may buy some physical on this.
Okay. That's good stuff. Good stuff. Yeah, we talked about those interest rates, and I did not play them, kicking myself a bit on that. But I'm going to look at. Let's see. Let me ask you this: and would you play this Goldman on a rebound?
I'm really Wells Fargo is the one I'm looking at. I'm looking at some of the smaller ones like KEY, and there's another one. I forgot the name of it. There's another smaller bank that I've been looking at.
Yeah. It's one I follow a long time out. I never buy it, but I always have it on my watch list. I think it's.
Oh yeah, brush out those old things. Cause this is.
Yeah.
If you follow the playbook, you have made a lot of money already.
Okay.
It's the old Fed. What happens when the Fed raised interest rate? It's just that simple. And the other one is the dislocation that's going on because of COVID.
Mm-hmm.
So. There's the shipping issue, so you look at that. You look at energy, because that's going up, and raw materials going up. So you should look at some of those. But those you need to look at short term. Those are not long term holding. The banks are.
Okay. Yeah, here's one bank that I follow, and I've been following it for years.
Which one is this?
INBK, First Internet Bank Corp.
Oh, yeah, I do know those guys. Wow, I think at one time if that's the right one, I think they were offering people like $250,000 loans.
Oh, yeah. I never really read much about this story. I just followed it from a chart. I've been following this thing for a long time. Yeah. But they, matter of fact, yeah, let's see what they pay a dividend too. I don't know what the dividend is. Let's see what the 6 cent. Yeah, this is about a 1% yield. Well, I guess quarterly. So about 4% a year, maybe.
Well, that's not bad.
Right.
Well, that looks really good. Okay, I'm going to stick this one on my list too.
Yes, sir.
I got to find out when it have its earnings. I'm going to probably wait a week or two after earnings, see how this fall out. Then I'm getting back in again.
Yeah,
maybe sooner than that.
Looks like earnings is this week on the 19th.
Once again, stock look like that. There's no way I'm holding it.
Right.
But afterwards, yeah, I'm gonna definitely take a look at that one.
Okay. Good stuff. Appreciate it. I didn't hear you beep in there. Yes, sir. Anything else you got on your radar?
Those are the main things right now. If it's making money, I'm interested. If it's losing money, I may go on the evil side and short, but I can't short in January. This is too much of a positive month. But
Okay.
come February, I may think about it. Just do some quick ones.
Okay. Yeah, I gotta do a better job of rotating out some other ones. But yeah, I like the strategy you said in terms of getting out of the physical and just buying the options on them. You know, free up some of the money. So
Yeah, this is a preserve your capital type market. Because I can promise you, the roaring 20s is coming. I mean, I can see it now just anytime COVID just abate just a little. Everybody go out and boom, pack up anything. So those stocks are going to probably, before this end, I promise you, it's going to blow up. Good time to make some money. If you get out right and stay out, you probably do well. If you keep going back in, you probably are not going to be liking life at the end of this.
So do you think that so do you think they're going to go through with all the interest rate raises this year? So I know they was talking about 3 possibly.
They cannot allow inflation to keep up at this rate. They will have to break it. Now, it with the old Fed in the good old Volcker years, as I like to call them, because they killed some people. I mean that literally, by the way, because they crushed the economy to kill inflation.
Okay.
And that cost a lot of people their job.
Yes, sir.
This is a more friendly Fed, more, hey, look what I'm finna do. That's why you can make money off of it. They tell you exactly what they're gonna do. They're not trying to hide anything from you. And if you just do the playbook, I mean, there is literally a playbook on what you buy when the Feds raise interest rate. I mean, it's all over the internet. And just go along and buy good companies that follow that playlist. Like, all banks aren't going up, but you buy the good banks that are doing right, that you hear good stories about. You see that the mutual funds like them. Those are the banks you buy, and you're going to make lots of money.
Yes, sir. Okay. I'm gonna have to give me some banks then.
Yeah. Just wait till all this earning over. See what you really want to do is, who did they really react positive to? Let it come in and then buy into those.
Okay. Yeah, I'm interested to see. I've been just buying more of this tech stuff as it gets lower. I don't know, I'm just so wedded to tech that I haven't been willing to make the rotation kind of to my own detriment. But I need
to. As long as you conserving your capital, there's nothing wrong with that. I'm not saying that tech is dead. I hear things like, that's ridiculous. Right. Just like what you were talking about, Kathy Wood. This is the time, if I was an investor, it was sort of like I would celebrate what's going on now with her funds if you believe in what she's doing, because this is your opportunity to buy more of them. Right. Buy it all the way down. It's just like a good example is Tesla. Now, the deal with that is, when Tesla first came down, I heard of them, and I went, oh, electric cars, oh, I didn't care. Okay. But there are people who went, wow, I'm finna save the future and buying to them. And they held for like 10 years.
Yeah.
And boy, have they been rewarded.
Oh, they made a killer. Yes, sir.
Yep. I mean, I forgot, was it $20 or something when you go back there without the splits and something?
Yeah, so my cousin told me about Tesla at pre-split, I don't know, probably 2 or 3 splits ago, at like what, 160 at a split adjusted rate. So I don't even know what that was. This was back in probably 16. No. I don't even think it was that long. It's probably 15 or 16. Yeah, probably 15 or 16. 2015, 2016. Yeah. And he saw it because he's a car guy, and he saw it. He's like, man, I see it. He said, I see it. And he just got shook out with Elon's, shenanigans, crazy stuff.
Okay,
he's talking.
That's 100%. I know exactly how he feels. I cannot stand owning this stock. Of course, I own it, but I can't. Ooh, I hate it. I want to sell it so bad all the time.
Hey, but whatever you did to make yourself not sell it, you've been rewarded for it. So yeah. But yeah, he couldn't. He hated, but he missed the run, and Kathy Woods called it, coming out of the corona or going into the corona, and that thing just rocketed, Yeah. So
yeah, all the big growth is going in there, but it's gonna probably maybe do at the minimum. This is my worst case. It's gonna be doing 25% a year, probably for about the next 3 or 4 years.
okay.
So I can't sell it. I just want to.
Hey, or whatever that logic part of your brain is winning over the emotional. So you're good. You're good on that one. You're good on that one. But definitely thank you, Milt. I'm sorry I missed you earlier. So yeah, we'll keep going. I guess a couple other people probably stuck around and listen. Yeah. Anybody else got anything before we drop off for real this time? Andrea Barry.
No, that was good stuff, Milt.
Okay, thanks.
Yes, sir.
Yeah, that was good stuff. Appreciate the knowledge.
Absolutely. Well, good stuff, guys. Hey, Barry, I want to talk to you about some of that real estate, man.
Oh, okay.
Let me
Now
know.
you're the man there. Real estate don't ever go out of style.
Man, I'm just glad I got some, because with this market, I'm just like, it's just crazy. But yeah.
Yeah, I promise you, follow that playbook. You will make a lot of money this year.
Okay.
All right, y'all have a good evening.
All right, y'all take care.
Take care. Bye-bye.